Hello guys, you are welcome once again to this channel. In this video, I'm going to break down my strategy I've been using for years now. All right, this strategy is very simple. In the forex market, every profitable trader has one strategy that has proven to have an edge in the market. All right, so there are different strategies, and when you are beginning to trade, you come across a lot of strategies. But after series of refinements, all right, and back testing, you settle on one. Personally, I've used strategies like SMC, which is the smart money concept. I've used ICT, which is the inner circle trader. I've used a new strategy called Trinity Flow concept. All right, then this strategy is actually what I was able to come up with, courtesy to Renatio, who actually inspired this particular strategy. But I've been able to break it down and understand how the strategy works. And so far, after back testing, I've noticed that this strategy has about 65% edge in the market, all right? About 65% edge in the market. What that means is that if you are using this strategy, chances are that 65% of the time you use this strategy, all right, you are going to end up in profit, all right? Considering you use this strategy with a good trading psychology and risk management, then you are going to be profitable. So you have 65% chance of making it in the forex market, all right? When you adopt this strategy, I'm going to teach you, all right? So yes, before I even get to, I don't want the video to be long, but before I introduce you to this particular concept or strategy, I would encourage you to subscribe to this channel, all right? Subscribe to this channel so that you'll be notified anytime a new video will be uploaded. All right, then if you are part of this family already, I want to thank you for being part of this family, and I encourage you to share this page to as many friends or colleague traders as possible. Let's make forex trading very simple, because most of the time you come across strategies and they look very complicated. Looks very complicated. They make forex, I mean, trading very complicated. I'm not saying it's easy to become profitable, but it's not that difficult also. All right. So most of the time you have to look for the simple ways to find profitability in the market, because if you see the end goal of this particular strategy is profitability, everyone entered the forex industry with the aim of attaining financial freedom, which is with the aim of making money and living a free life. All right. So yes, there's nothing to be complicated. There's nothing to make you confused. Just be able to break down the complex things that have been presented out there into a simple one you can understand, and that can give you an edge over the market. So let's get into the strategy for now. The name of the strategy is called the MAEE concept, or the MAEE concept, all right? Or the MAEE concept. That's basically the name of the strategy. And we have the first one, which is the M, all right, which is the market structure. The market structure is the first one, as you can see. Then we have A, which is the area of value, which is the second thing we look at in this particular strategy, area of value. Then the third one, which is the E, is what we call entry trigger. Entry trigger. Then the last E is exit point. All right, so very simple strategy, and you can screen grab this particular diagram because you might want to refer to it later as you practice or as you backtest this strategy. So the MAEE formula has market structure as the first thing you are looking out for. You find the area of value, then there's the entry trigger, which will now confirm our exit point. All right, then we now end in profit. All right, so let's get into try to break down this particular strategy. Let's try to break down this particular strategy. Yes, so the first part of this strategy is what we call market structure. Market structure. All right, market structure. All right, when you talk about market structure, we are looking at the direction of the market. Actually, is the current direction, all right, or trend of the market. And I hope by now you know that the forex market moves in cycles or in series of highs and lows, all right, which is what I'm going to talk to you about in this particular part of the video. The market structure tells us the current direction or the trend. All right, so if you don't know the current trend or direction of the market, chances are that you are going to end up in profit, or you are going to take uncalculated or unplanned trades. All right, so the first thing you look out for is the market structure. And in the market structure, we look at, is the market in an uptrend? All right, is the market in a downtrend? All right, or the market is in a range, or what other people call consolidation. All right, or some even call it accumulation stage. All right, so yeah, when we talk about market structure, we are looking for three things. Is the market in an uptrend? Is the market in a downtrend? Or the market is in a range? And let me give you a tip of, for me, whenever the market is in an uptrend, I'm looking for buying opportunity. When the market is in a downtrend, I'm looking for selling opportunity. And when the market is in a range, all right, what I do personally is to stay out of the market. All right, stay out of the market. All right, that's basically my strategy. When the market is in an uptrend, I'm going to go in there and I'm going to look for buying opportunities. When the market is in a downtrend, I'm going there, I'm looking for selling opportunities. And when the market is in a range of consolidation, I look for opportunities in other markets or stay out of the market. So quickly, let me just show you how to identify the trend of the market, which I've actually done series of videos explaining spotting the direction of the trend of the market. But for the purposes of this video, let me just be fast. I don't intend to waste more time or spend more time here. All right, so you see the market go up, come down, goes up, comes down, goes up, comes down, goes up again, something like this. All right, so now in this kind of direction, I can see that the market seems to be moving to the upside. Can you see that? So the market seems to be moving to the upside. In that case, then this market is what we call an uptrend. So in an uptrend, there we have a series of higher highs and higher lows. So this point now is what we call higher high. All right, this particular point is called higher high. All right, then we have one point here which we call the higher low. All right, this particular spot here, higher low. Then this point is what we call another higher high here. All right, then we have a higher low at this point, just like that. So we have another higher high here, you see. So now in an uptrend, we have a series of higher highs and higher lows, and that's how you identify an uptrend. And let me show you how do you have higher highs and higher lows. The price started from this point, all right, went all the way up. When the price got to this particular high point here, all right, the price couldn't break to go up again, so it started coming down from this point. So you see that this first point is a high. Are you seeing that? When the price got to this point, it couldn't go down again. The price was choked here and started moving up again. So this is higher low. Then when the price started moving up, when it got to this one, the price broke these particular highs, which it couldn't break previously. It broke it and formed a new high at this point. So we call this also a higher high. And why is it a higher high? Because this new high is higher than the previous high here. Do you get it? This new high is higher than the previous high here. Then the price started coming down all the way to this point. It couldn't break these particular highs here. All right, it couldn't break the highs here and formed a high here, but then that high is low. Are you seeing that? So we have a higher low at this point. Then the price went all the way up, broke this particular high and formed a new high here. So no, the price came down to, you find another higher low here, and then the price is still going currently at this particular high. So if it's able to break that high, we have a new higher high at this particular point, and that's how you identify the trend of this particular market. So this is a series of higher highs and higher lows. So that's what we call an uptrend. So now let's move down to see how a downtrend also looks like. So we have the price come down, retest, comes down, retest, comes down, retest, comes down, something like this. So what we are seeing now at on this particular chart is that we notice the price, all right, came all the way down, retested this low, then went up, retested this high, went up. While it's coming down, it broke these particular lows, all right, then it formed a new lower low at this point. So this is a lower low, all right, lower high, then lower low. It went up, want to retest this particular lows here. So we have a new lower high at this point, you see. So in a downtrend, the price movement is characterized by a series of lower lows and lower highs, and that's how we identify a downtrend. I will leave the link to that particular video on identifying the trend of the market in the description, and I believe it's going to great deal for you in understanding this, because I don't intend to spend a lot of time on this particular one. All right, so let's move on. The last kind of or type of market we have is what we call the range market. So you see the price move up. Sorry guys, let me make it better. You see the price move up, came down, move up, came down, move up, came down, move up again. So something like this. So we can see that the price is confined within two highs and lows, these highs, all right, and these lows. So the price is formed within them. So we have the highs here, highs here, highs here, highs here, all right, low, 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 low. So here we expect that the price will form something here, come down and retest this again and go until the price is able to either break through this or come here and break to the downside. All right, so yeah, in this particular kind of market, we call it consolidation or range market. And personally, I like to stay out of the market anytime the price is forming a consolidation. I don't do aggressive trading. I trade in the path of least resistance. So when the market is in an uptrend, I will only be looking for buying opportunities. When the market is in a downtrend, I'll be looking for selling opportunities. And when the market is in a range, I try to stay out of the market. As simple as that. All right, so that's the first part of this strategy. Then the next thing we want to identify is what we call the area of value. The area of value, you can simply call it AOV or area of value. And then with the area of value, personally, I resort to what we call support and resistance. All right, support and resistance is what I use to identify my area of value. Area of value simply means the place on the chart where buying or selling pressure might set in. All right, so when the price is at the support, at that support zone or area, we are going to look for a buying opportunity. And the price that is at a resistance, we will learn to look for a selling opportunity. Are you seeing that? Simple as that. And one thing I need to teach you is that, see, support and resistance, all right, are areas or zones, not lines. All right, support and resistance are areas or zones. They are not lines. They are not lines. They are zones. All right, so what is the support? Support is the area or zone, all right, on the chart where buying pressure or opportunity might set in. See the use of the phrase, an area on the chart where buying pressure or opportunity might set in. Notice the use of the word. I did not say was setting, because trading is about prediction and probabilities. All right, so is that area or zone on the chart where buying pressure might set in, and that's what we call support zone. So at the support zone, we are only looking for opportunities to buy the particular asset or currency pair you are trading. Then there's what we call the resistance zone. All right, resistance zone, opposite of this, which is the area where selling pressure or opportunity, all right, might set in. Simple as that. So that area on the chart where selling pressure might set in, all right, that's what we call a resistance zone. So let me just use this particular chart here to show you. All right, so you notice that when the price was coming down from this point, and it got to this point, you don't know what happened, right? But the price started moving down. So this particular high point where the price started selling is what we call a resistance. Are you seeing that? So I'll just draw a zone there and wait for a selling opportunity. Then this point, when the price came down, the price wouldn't break below, further below this particular point where the price returned up, buying pressure setting, is what we call a support zone or area. Then the price was coming up. Then this point too, it was retested at this point and the price started coming down. This high point is a resistance zone. So that means this point will be a support zone here. This point will be a resistance zone. This will be a support zone, because selling pressure, buying pressure setting from here, selling pressure from here. Are you seeing that? So that's how you identify support and resistance. And I said it's not a line because some people draw their support. Imagine there's a support, they put it like this and wait for price to retest and go long. But the mistake is that the price will do its thing and you might miss the trade or get a wrong entry. So what you do is I use the rectangle to draw an area on the chart. Simple as you see how it is, an area on the chart. You can draw another support zone, which can be this point, all right? Can be this point. Have you seen that? So at this point, we expect that the buying pressure comes in here to goes in. So here the price will break, all right, and come all the way down. You expect that at this point, all right, something will happen, then the price will buy again at that particular point. All right, now how about resistance? How about resistance? Resistance is the high point where selling pressure is setting. So using the rectangle tool again, this particular point is a resistance zone. All right, particular point is a resistance zone. This particular point is a resistance zone. All right, and this particular point as well is a resistance zone. Are you seeing that? So that's basically resistance, that high point or area on the chart where selling pressure might set in is what we call a resistance zone. Right, so that's simple as that. You know, when it comes to identify area of value or point of interest, other traders use trend line to confirm. Some use the exponential moving average 50 period EMA to do, but here we employ the concept of support and resistance, all right, or demand and supply to do that. All right, even other concepts called the Trinity flow concept, he calls resistance level a premium zone, then he calls the support level as a discount zone. So it depends, it's just different ways of calling it, but it's the same thing we are looking out for in the market. All right, so that's basically this one as well, the area of value as well. So the next thing we want to look at, all right, is what we call, which is the third part of the strategy, what we call the entry trigger. Entry trigger. An entry trigger is simply what will cause you, all right, to press, what will make you buy or sell. All right, so when the price gets to the area of value, you are not forced automatically. No one is saying you should enter the market, either buy or sell. You would have to wait for a confirmation, all right, a confirmation setup before you can enter, buy or sell. And in this particular part of the strategy, that's where I employ the concept of candlesticks, all right, the candlestick patterns. Sometimes too, I use chart patterns, all right. So I use candlestick patterns and chart patterns, and then with the chart patterns, I go for either a double top and what? Double bottom. Just these two I use for chart patterns, all right. So because I want to focus on some few ones that work, and most likely you see these patterns formed many times. So candlestick too, and I'll leave a link to the description, to the video in the description, because I've done a full video explaining to the profitable candlesticks I use when I'm trading. All right, when the price gets to my support zone, what will make me buy? There has to be a candlestick pattern that has formed before I enter buy in that particular trade setup. All right, so I have about 6 different candlesticks. All right, I've analyzed or done a video on in the previous videos. About the last 2 videos I focused on candlesticks, so you can go back to my page, all right, and go through these particular videos. It's going to help you. So when there is a buying opportunity, I look for candles called hammer. I look for a bullish engulfing candle, a bullish engulfing, and then I look for a morning star candle. Then for selling opportunities, all right, sell. What are we looking for? We are looking for the opposite of hammer, which is what we call a shooting star. All right, then we have what we call a bearish engulfing. Then we have the evening star. The opposite of morning is evening. It's not afternoon. All right, so an evening star candle. These are the confirmed candlesticks I use. So when the price comes to my area of value, if I don't see any of these candlesticks, I'm not going to enter the trade. Why? It doesn't follow my plan. Or if I don't see these candlesticks, but I see one of these patterns, and I'm looking for buying opportunity, I'll be looking for double bottom. If I don't find it, I'm not going to trade. And double bottom, because I've not done a video on it, it's like you have your support at this point, all right? Then you notice the price came down, went up, came down again, all right? Then began to push up, all right? So at this point, you have one bottom here, second bottom here. So this start happening, it tells us the price is going to buy at this particular point, all right? So that's double bottom, all right? And I'll do a video on it, you don't worry. Let me just focus on this particular one. Yeah, so these are the candlesticks I use. Then the last part of the strategy, which is what we call exits. Exit point. The exit point, I'm simply looking at my take profit and my stop loss, which is very important. Take profit is that point on the chart where you want to get out of the trade and take the profit you've gotten so far. Right, then you have the stop loss, which is that point where you want them to cut, or you want to cut your losses in case the price is reversing against you. For example, if you are going in an uptrend, then the price retraces, you notice there is a reduction in what? Bullish momentum. There's a reduction in the bullish momentum, all right, there's a reduction in the bullish momentum at this particular point. Then you notice the price comes down, break this particular low here, all right, and the price is going down at this point. Then you know, of course, the price is currently reversing and it's no longer in an uptrend. So you try to get out of the market, right, or the price will come and hit your stop loss. Price will come and hit your stop loss at this particular point, you see. So yeah, so that's basically the advantages of take profit and stop loss. And any trader who fails to set a stop loss is a recipe for disaster. So just always remember to set your take profit and your stop loss anytime you are entering a trade. So let me just try and summarize the concept so far. All right, so the main concept, as you've seen so far, all right, we have the first one, market structure, which tells us the direction of the market or the trend of the market. We have the area of the value, which tells us the support and resistance area on the chart where buying or selling pressure might set in. The entry trigger is what will cause you to finally press the buy or sell button. Then the exit point is when do I want to exit this trade or get out of this trade, whether in profit or loss. Then right after that, we lead straight to profitability. All right, so I want us to just look at one chart and see if we can analyze using this particular strategy. Let me see GBP USD here. Of course, this is GBP USD, and you know this strategy, we combine it together with top-down analysis. This is the analysis I've done so far on GBP USD. Let me try and go through together with you without deleting anything or clearing anything on the chart. All right, so yeah, this is what's the current trend of the market. Let's see from this one. Try to zoom out a bit. On the 4-hour time frame, we see that the trend, the price came down, went up, came down, came here, broke. All right, this point and go. Let me just stop here. Can you see that from here, lower low, lower high, broke this particular structure, formed a new lower low. The price came to retest this particular point. If you are not seeing, let me show you. Price came all the way down, went up, and the price was coming, broke this low and formed a new lower low here. And the price got up, retested this, came down, retested this, and broke it. So now this part of the market was a downtrend. This part of the market, all right, was a downtrend, as you can see, all right. But then from here, the price seems to have changed direction, thinking it will go up. But what do we see next? The price came here, retested, came here, then came here, broke these particular lows here. So what we are seeing, this pattern we are seeing here is what we call a double top pattern, which tells you the market is changing direction. The market came down, all right. Then the price came all the way up, all right. It has broken this and seems to be trying to go to an uptrend at this point, all right. So that's basically it so far. So what's the direction of the market? And I have a tool to check. Here you can see the market is currently in a neutral state, all right, but I know the market might switch to an uptrend very, very soon, right? So in markets like this, what I do is to stay out of the market. I don't trade because the market is in a consolidation stage and I don't intend to take a trade. For example, if you want to enter the trade from this point, buy opportunity from this one, even though the price is giving us some confirmation, rejection, all right, here acted as resistance, rejection. So these points can be a good area of value, all right. But my question to you is, are you going to buy or sell? Someone will say, oh, I want to buy. Why? Because I'm seeing this candle here as a hammer. This particular candle is actually a hammer, but is it at an area of value? This point, this point, is it at an area of value? And even if you want to buy from this point to this point, my question is, why are you going to set your stop loss? Because your stop loss should have something to defend it, as in a support or resistance level to defend it. But imagine you set your stop loss, you enter the market from this point, all right, then you take profit somewhere here, but your stop loss cannot be here. If your stop loss is here, that's 0.82. That means the risk reward ratio is 0.82, which means you are risking $1 to make 82 cents, which is an unprofitable thing to do. So the stop loss, if you bring it up to this point, chances are that the market most of the time, all right, comes all the way down to retest this particular before it goes up. So that means your stop loss will be hit and you'll be unprofitable. Are you seeing that you end up in a loss? So you push your stop loss up a bit, then you have 2.71. What that means is you are risking $1 to make $2.71, which is good. But what's the chance that in fact at this point the price will come and retest and try to go up, because it's not at a good area of value? All right, but I know some people are aggressive traders and they can enter, but I wouldn't, because it doesn't follow my trading strategy. So what I would do is to go to another market to look for opportunity. So here we are currently in GBP GPY market. Let's go down to up to the 4-hour time frame. All right, what's the current direction of the market? From this point you can see clearly that the market is moving to the upside. All right, so the market is currently in an uptrend. In an uptrend, we are looking for buying opportunities, only buying opportunities. All right, so there's the current support zone here, one support. Then you can even draw one support at this point as well. Right, one support at this point. The reason for the multiple support is that when the price, all right, comes to retest this point and go up, the market is still in an uptrend. All right, the market is still in an uptrend. But if the market price comes down, broke this high, and comes to this point and even reverses, the market is still in an uptrend. But supposing the price broke this particular low, then you know that the price is no longer, or the market is no longer in an uptrend, has now reversed and is now in a downtrend. All right, so that's why I draw two support zones at this particular point, so that I can confirm a change in direction of the market. So I'll do this and I'll go back to the 15 minutes time frame to look for an entry trigger. So this is how the 15 minutes time frame, which gives you a clear indication of a downtrend. All right, the price came down, retested, came down, retested, came and broke this one, came, retested, broke. So now the market is clearly in a downtrend. So I'll be looking for, on the higher time frame forward, the market is in an uptrend, but on the 15 minutes time frame, you see that the market seems to be in a downtrend. But it's not confusing. You still want to trade in the direction of the higher time frame trend, which is an uptrend. So what I will do is to be looking for a support level at these points. You see these points, let me just go and I'll explain to you. This Forex strategy is not something you just enter the market. And anytime you get confused and you don't really understand the trend of the market, please look for opportunities as well. So this is what I will do, because these points, this point, all these points have been tested. It tested, went up, came down, bounced back, tested. So this point too, I'm expecting that because of what has happened in the past around these particular areas, I am expecting that the price is coming down, but it's going to retest these lows here. Then I'll look for a buying opportunity at this particular point. Look for buying opportunity at least all the way up to this point. Come and retest these highs, all right, and come down to retest these lows again. All right, then the price will now buy. So this is what I'll be looking for on the 15 minutes time frame. So now I've done all my analysis, and I'll just put my support zone at this particular point in waiting, expecting that, of course, the price should be able to form one of my bullish confirmation candlesticks, which is either a hammer, a bullish engulfing candle, or a morning star at this point. Once it forms at this point, I will quickly enter right from here. I'm sure when it forms, I'll wait for the price to go up, all right, to retest here, come down to retest again, and then at this point where I will now have a double bottom pattern, then I will now look for an entry all the way to the upside. All right, very, very simple. So I'll just place my long 2 at this particular point, then all the way to this point. All right, then I'll place my stop loss somewhere here. So you can see that risk reward ratio is 2.97, which means I'm risking $1 to make $2.97, or literally $1 to make $3, which is a very, very profitable trade. So this is what I'll be waiting. I've done all my confirmation, so I'll just be waiting until the price forms what I'm looking for. If the price fails to form what I'm looking for at this particular support zone, I will not trade for today, or I'll look for opportunities elsewhere. Right, but if the price is able to form what I'm looking for, then I will be expecting that I would enter, but the price will come down. I would enter, right? The price will go, come down, do what you want to do here. Then you notice the price will now hit my TP. All right, and this will be my stop loss. Simple as that. All right, so I'm doing this fast because I've tested this strategy for a number of years and I understand how to spot it on the chart. I know as someone who is new to this strategy, you need to take your time, watch the video and back test, apply it on different currency pairs so that your eyes can be what I call your forensic eyes, to be able to identify what you look for in this particular strategy easily. So yes, I know you were helped by this particular strategy, and I want to encourage you to subscribe to the channel, leave a comment in the comment section, and share this video to different colleague traders you have. See you. Thank you very much. See you in the next video. Bye-bye.